Hey folks, Chris Versace here, Monday, February 10th. You've watched the Super Bowl, you've seen a bunch of new commercials, and possibly you've eaten too much dip, too much nachos. Well, as folks recover from the big game last night, let's get ready for the week ahead. We've got three big items that we want to watch in the coming days that will influence the market, which is already dealing with investor sentiment that is flashing fear, according to the Fear and Greed Index. So what are these three items that we will be focusing in on? Well, reciprocal tariffs is one. Two is going to be the January CPI, PPI, and Fed Chair Powell making back-to-back testimonies in front of Congress this week. And yes, third, more earnings. Let's break it down. On the reciprocal tariffs, late Friday, President Trump signaled he would be unveiling reciprocal tariffs sometime this week. As we saw, that sent the market into a bit of a tizzy on Friday. Over the weekend, there were some comments about tariffs on steel and aluminum. We'll have to see what the specifics are. But let's remember, too, that as we kick off the week, China's reciprocal tariffs announced last week also kick in today. More than likely, the week is going to be a little volatile as we get not only the initial impact of China's reciprocal tariffs, any potential reciprocal tariffs put on by President Trump, but the ensuing response from those countries as well. So my message is going to be this: take your time, understand the details as they become available. That is how and when we can start to plot the potential impact on sectors and companies, and potentially demand and the impact of the overall economy. So there's going to be a lot going on. And remember that market sentiment of fear that could drive some extreme reactions. Don't be surprised if the SIBO Volatility Index, better known as the VIX, is bouncing around all week. Take your time, look for opportunities, double check the fundamental thesis behind anything you're looking at, the thematics that we use, and of course, the market and individual stock technicals. So let's move on to our second item of the week. That's going to be Powell and this week's inflation data. So Tuesday, Wednesday, we've got back-to-back days of Fed Chair Powell speaking. Tuesday, when he takes the stage, so to speak, at 10 a.m. Eastern, I suspect that he is going to reiterate his message of a more cautious path to the Fed's next round of rate cuts, whenever they may be. Currently, the market expects something around the June timeframe. I have to be honest, coming off of what we saw with last week's data from ADP regarding January employment and wage gains, the wage gains that we saw in the January employment report, but also some of the inflation indications that we saw in the rash of January PMIs. My inclination is that if we see a little bit of more data in that direction, those rate cut expectations are going to slip into the back half of the year. The why behind that? Remember the key words: sustained movement toward the Fed's 2% target. That's not 1 month, that's not going to be 2 months. It's going to be several months of consistent data showing progress back towards that 2% level. So the timing of when Powell speaks is kind of interesting, because Tuesday, we don't get any inflation data. Wednesday morning at 8:30, however, we will get the January CPI report. And the expectation is that the core CPI will tick higher, certainly on a sequential basis, potentially on a year-over-year basis. If we get that, it's going to be another data point that kind of builds to the notion that Powell is going to issue slightly incrementally more hawkish comments Wednesday morning when he concludes his testimony with the second part, which also begins at 10 a.m. And then on Thursday, we get the January PPI report. So this could be a big week for rate cut timing expectations. So we'll have to see what happens. Again, my thinking is that it's likely to slip into the second half of the year. There are some folks that are incrementally saying, why does the Fed need to cut rates? The economy is humming. We continue to see, good job growth, real wage gains. And of course, there's the potential question on tariffs. So in addition to Powell's comments being, incrementally hawkish, we're also going to want to listen to anything that the Fed chair might have to say about tariffs that we've learned about really over the last 2 weeks and their potential impact and how the Fed might be thinking about that impact. So it's going to be a big Tuesday, Wednesday with the Fed chair. And then finally, we have earnings. The reality here is that we're coming off 2 weeks of a lot of big tech earnings. They do account for a demonstrative amount of the S&P 500 by weight. So we have a little bit of a slower pace this week, but there's still going to be a lot of information coming because as investors, what do we want to do? We like to collect earnings call comments about the economy, about the particular industry sector, and of course what individual companies are doing. That helps us refresh, update our investment mosaic, our investment outlook, call it what you will. So when we think about the companies that will be reporting this week, things that we'll want to be collecting data points on are, what's going on with input prices, wages, other pressures, overall pricing. Are they able to get more pricing, or are consumers pushing back? Is discounting rising? What's the overall demand picture? What's the impact of the dollar and currency headwinds? Are we hearing anything on the implication for tariffs? And, candidly, I think that we'll start to get some comments on that, but I think that when we move into the final leg of the December quarter earnings season and the attention shifts to retailers and retail-facing companies, that's when I think we're going to start to get a much better sense as to what the impact of tariffs, particularly the reciprocal tariffs from China, might do for earnings expectations. Now, as we collect all of these different things, you're going to want to juxtapose these new learnings with what we heard from companies over the preceding weeks. And again, that will help realign, update, refresh, call it what you will, your investment mosaic. So what are the companies that we'll be looking forward to, paying close attention to? Well, today you got McDonald's, Tuesday, Coca-Cola, Global Foundries, Marriott, Lyft, DoorDash. If you think of Marriott, Lyft, and DoorDash together, they'll give a nice update on the state of the consumer. We also have Kraft Heinz, food inflation, food prices. We have later in the week Equinix, Duke Energy, Digital Realty Trust. Those will be some interesting comments about data center demand, data center spending, and on the power to power those data centers. So there's a lot coming on. And of course, we can juxtapose those comments across a company like Granite Construction or others tied to the build out of not only data center and other non-residential projects, but those too that touch electrical capacity and other forms of power. So it's going to be a big week. I would suggest that you kind of check back, look here Tuesdays and Thursdays for our thematic signals and other insights and comments on the market. Thanks for watching.